Uh-oh, spaghetti-o! The market's in the rising wedge and we may just get the splat. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty guys, how about that intro? Welcome to today's market update, guys. There's actually a lot of the Dow Jones, guys. Dow Jones is actually looking frothy. What's happened with that? What's happened with the mining stocks? Bit of an update on gold as well too, and some Fibonacci levels that I want to share with you, and a whole bunch of down home country goodness. Guys, a lot of people have actually asked me about how I actually trade the markets. Like, how do I trade the markets? What sort of system do I use? What sort of strategy do I use? How do I actually trade the markets? What sort of pattern do I look for? And so on and so forth, right? So I've just recorded a brand new training, and the very first link in the description, when you go over there, register, you're going to get access to this training. Plus, I'm also going to share with you the 3 secrets about what you need to do to make an income from the markets. And also, I'm going to share with you a bit of a dark past about my life and something that almost completely wiped me out. And so it's pretty dark, but I share that story with you. So go check that out, guys. Link in the description. Now, let's have a good old look of the markets. Firstly, let's have a look at the Dow Jones. Now, looking at the Dow Jones, we're like, what's going to come next, right? Because the trend is your friend until the end, isn't it? So some people are like, what are you talking about? The trend's up, let's short it. John, the market's going to crash. All right? Every time we get a bit of a pullback, oh, it's going to crash, it's going to crash, going to crash, going to crash, going to crash. Your mate Harry Dent, right? Your mate Harry Dent's like, oh, the market's looking fluffy. Ah! And it just does that on you, right? So look at this here, guys. Look at this here. And it's so, and guys, the reason why I'm having fun at that is because, right, like, we just have to listen to the markets, right? Listen to the markets and talk about, okay, what's your market? You talk to me, right? Talk to me. What's happening here? What's happening? What's going on? And, you know, and what's going on through here? So we could see that we have a bit of a sideways phase, but we're still making out of the Dow Jones. We're looking a bit frothy here, but we made this lower high, but we've got this significant higher low, and higher low. And if we use the good old Fibonacci tool, oh, by the way, guys, people ask me, like, what sort of software do I use? I use TC2000. I think that's the best software out there for the Australian market. You can use it for foreign exchange as well too. You know, and obviously all other markets out there. I think TC2000 is the best platform out there. It allows me to scan for my opportunities and all that sort of stuff as well too. Look at this here, guys. Look what this here. So the market came down. We had had an up, sideways up through there, and then we started having a bit of a pullback. And look what happened through here. We actually pulled right back to where? Right back, damn smack bang on the 50% level. So that's going to be, we're at a very, very, very interesting point through here. We had a bit of a rally up, and now we're actually going back down here. So this point where we are right now, probably more about that 50% Fibonacci level is still going to be key. If we do break that level, guys, if we do start to break this level here, then we're probably likely to start to see a move back down towards these lows through here, and maybe even overshoot towards these lows down here. So that's the interesting thing that's happening with the Dow Jones. And now it's so weird because if you look at the Dow Jones, this is the high right now, and this is the high back in early August. If I take everything off the screen here and go back to the S&P 500, this is the high right now, and this is the high in August. So the S&P made a higher high, still an upward trend. Same for the Nasdaq. This is the Nasdaq. This is the high back in early August, and this is where it is right now. So the Dow Jones has made a lower high where the S&P 500 and also the Nasdaq has made a higher high. So the Nasdaq and the S&P 500 are both in a very, very big upward movement in the markets. And so if we have a look at the S&P 500 as well too, look at this here, just beautiful. We've got a beautiful upward trend on the S&P. So nothing has really changed yet, okay? So remember, the market, she's like a woman. All the women are disliking my video right now. What are you talking about? Right? Women, you know exactly what I'm talking about. You have the right to change your mind at any time. So does the market. So we must be flexible. Right now, she's pretty good, right? She's just having a bit of a rest. She's pretty good. She hasn't changed her mind yet. It's woman's prerogative to change her mind, right? But look at this here. Beautiful higher lows all the way up. And look where it's actually bouncing off. This is a 52 moving average. Now I'm using a daily chart here. So therefore it'd be a 52-day moving average. Higher low, and higher low. Just beautiful high lows. And look at my moving average. Look how strong it is. So we're in a beautiful, strong upward trend. We haven't gone too far. We haven't gone too far away from the moving average as well too, which is like just a beautiful upward trend. We're not overbought. We're not oversold. We're definitely not. We're definitely not oversold, right? But we're definitely not overbought, because overbought is we get too far away from the actual moving average. And that's when, like, if you go back in time, you can see here, right? Notice how when the market starts to get way too far away from the moving average, like this here. Notice how we just overstretched. We end up coming back to, as you can see, the moving average. That's what happens when we get too overstretched in the markets. But so that's what we're looking at through here. So just like back, so guys, the most important point here, as you can see, the Fibonacci tool. If we go from the low point back here, back in time, and we go to the high point, look what back here, right? We came back down, look at here, we came back down, and we retraced what? Less than 50%, and then we continued back up. Very nice. So that's actually what happened there. Let's go have a look at the recent one where we're at right now. So we're going to go from the low point to the high point. And so as we can see by using the Fibonacci tool, and if I zoom right in, let me actually zoom right in a bit more. Let's actually zoom right in here. We can see that the areas of main support, first it would be this longer term support line here, but you can see how that comes right in line with this 4,480. 4,460 would be that 50% Fibonacci tool, right? From the low to the high, and we're there. So right now, there's no warning or no concern about the trend is over, right? The trend is your friend until the end. And guess what? The end is not here yet, okay? So this could just be another one of these dips and another one of these dips before we start to see another rip. And with all of what's going on right now, with still just another infrastructure being passed and just where we are right now, and they still haven't tapered yet. There's still 0% interest rate. So we haven't seen the blow off top yet. And so therefore this market will end in a blow off top, and we haven't seen it yet. So maybe, just maybe, we're getting ready for that to actually start to happen. So just keep an eye out for that, guys. The areas for me right now would be, again, on the S&P 500 would be that 4,460. We start to break that level there, and especially start to break below here on this support level here. That would give me a warning sign that, okay, it's probably starting to slow down, because if it starts to retrace more, especially if it starts to retrace more than a 62% level there, then that's going to tell us, okay, something is not right there when it comes to this market here, and now it's starting to weaken. But as I said before, if you go back and look at the Fibonacci from the low point, from the hair point, right? And then we go to the high point, from the low to the high. And as you can see, right, look at this here. Once again, retracement 50% or less shows strong momentum. That's a nice healthy pullback, strong momentum in the market. What happens is that let me just use this as an example here. And as you can see, like, I'll go back to here. As you can see, look at this point from there to there. Look what happened, came down 50% and retraced. Let's go to the next low, to the next high, and look what happened. Came down less than 50% and then continued, right? So very strong. But look what happens here. What happens when we start to get more than 50%, right? The momentum's weak. So you can see here that we have these big gyration points through here. That's where the momentum's actually weak and it's not strong. So, but you can see when we start to get these 50% or less, 50% or less, 50% or less, and the way we go. Even a 60% level is good, but the most powerful one is, as you can see, the 50% or less is a very powerful retracement, just like we got back here, and so on and so forth. So just keep an eye out for that, guys. Moving over now through to Nasdaq as well too, and you can see how the Nasdaq has just been really nice to the upside. Let's actually bring this up to here, and let me just delete this off the screen. Let's just delete this off the screen. And as you can see, let's go back to the good old Fibonacci tool. Let's go from the low point to the ultimate high point, which was actually probably through there, but we can go through there as well. And you can see that we did get a bit of a retracement through here. It's probably that point through there, and we've got a bit of a retracement coming up through there. If I go to that low point there, that's actually probably a very, very, very smaller time frame there. You can see how that actually was. It's not really, because you got a sideways movement, so it's not really a good strong move up. But we did get a strong move up right now. And look what's happening with the moving average, right? Actually, you know what? Let me stay on the Fibonacci tool, then I'll get the moving average. So if we go to the Fibonacci tool right now, we can see that from this low point here to this high point where we are right now, right, from there to there. So we have from there to there, which is just a nice move up, very, very, very nice move up. And so if we are going to retrace, we'll probably have a bit of a retracement down to the 30%, maybe even down where this move now is probably likely to come to some sort of an end, this up move. So we're probably likely to see a bit of a weakness in the short term, maybe even have a bit of a short-term pullback towards the 15,000 level, maybe even down to the 14,900, but that's all I believe is likely to happen. And look at what's actually look what the moving average is telling us, because the moving average really does give us a bit of a guideline. I'll give a gauge of what's happening here, right? So you can see here we had the strong moving average, strong momentum. Then the market actually started the moving average started flattening out. No momentum at all. We had the start of the slowly increase through there. But look what's actually happened recently. Look how strong. Look at the angle of where this moving average is. That means there's a lot of strength in this momentum, right? The momentum's really strong momentum. It's really starting to pick up. And when you get that strong momentum, let's actually go back to here. When you get that strong momentum periods, look at this here. Look how strong that period is through there. Look how strong that is, right? It just shows you that there's a lot of strong momentum. And the last time we did this, right, we got out of flatness and then we got strong. You can see we had a big move. Flatness, and we start to get strong, and we have a big move as well too. So you could see that through there. And this is the same thing I'm looking at for gold as well too, guys. I seeing what we're seeing on gold is that the same sort of thing. We actually had a move down, and now we had a very, very, very strong move back up. So the big key that I'm looking out for is that if I go from the low point to the high point of gold, is that I want to see gold right now sort of hold here, or maybe even down to the 50% level or less. If we can get that and then create a higher low, that's going to be very, 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 very powerful for the bulls if we do start to see that in the markets. Now, I've always in the actual gold and the mining sector, I've always been cheering on the bulls by saying, here we go, we're probably going to have a bit of a false breakout and the slingshot pattern, and here we go, and here we go, and here we go. We may not get that, guys. We may not get that. So we're going to have to wait and see what actually happens through here, right? We had a bit of a pullback to the moving average, and we are getting a bit of a drop to the downside right now. So we could still continue to see a bit of weakness coming through here, guys, and same for the GDX as well too, and same for the other mining sectors. So what we want to see here is we want to see this market continue, like on the SILJ and even the SIL. We want to see these levels through here. So let's take this off the screen here for a minute. There we go. We want to see this level here. So you can see we had a move up. Now we're getting a pullback. We want to see the SIL hold here. And if we do hold here, we can see how that's going to create, if we do hold there and we start to create a bit of a buying action, that's going to create a bit of a higher low here. And we're going to continue this nice move. And then we're probably going to see a very, very nice move up. But we're having a bit of a pullback through here, guys. The one thing that concerns me about this overall is if I take everything off the screen here and squeeze my charts up, you can still see that the trend is actually still down. And this is one thing that does concern me a bit. Okay, we had a move down, then we had a lower high, and now this actually could be another lower high before we see something like that. So that does concern me. So we want to see these buys come in. If we start to have a bit more of a drop down to probably 38 or more, then it's probably going to be game over, and probably likely to see another sharp move in the mining sector. So that's what I'm seeing there today, guys. Hope this helped you out. So just keep your risk really, really, really small, guys. It's just the way that's so important for you guys to do that. As I said before, that if you'd like to learn my trading system, how I trade the markets, and a whole round of down home country goodness, where it's like the 3 secrets to help you doing really well, and some of my dark past as well too, or what almost completely wiped me out. Then click on that link in the description, go register, and then you'll get access to that free training that I've just done. So go do that right now, guys, and I'll speak to you in the next video.